checking in no bag, shopping when we land. Big FN bag of ballin'. Plead the fifth if I get caught, they talk. Came through dripping on them, I been saucing.
Yo, what's going on, y'all? J Trades here, back in a brand new video. And in today's video, I will be talking about why you should not take partials. And this is just based on my personal opinion and experience based on all the training I've done in the past years. So I just want to tell you guys why I personally think taking partials is actually extremely bad to your trading system and why you would rather exit earlier than try to maximize the full entire trade. And this all comes down to mathematical, statistical standpoints, right? If you're thinking about trading, instead of thinking about just trying to do the guesswork, seeing how price action is moving around, whatever, trying to think you can intuitively try to guess where price is gonna exactly reverse. We're trying to basically get and capture a piece of the pie. So basically try to catch a piece of the move. You don't necessarily have to catch a whole entire move, because what happens is many times traders try to catch an entire move, try to trail their stop loss. Sooner or later, they end up with a basically risk reward that is uneven or not good because they have taken partials along the whole entire way of the move. And you would rather just do 50% of the move and just fully exit the trade. And that's also a less stressful situation to manage your trades, right? If you have just one take profit, it's a lot less stressful than if you have multiple take profits and where you have, oh, set stop loss break even here, oh, trail stop loss here, oh, hits this point, then I move my stop loss here, this and that. It overcomplicates the trading. I did have a previous video, yes, I did make on a trading system that I do have. So I have two different ways of taking profits, right? One of the ways is a mechanical system. They're both mechanical, by the way. Mechanical system that I showed on my YouTube channel previously, where basically for those that really think their personality wise, they can't handle holding all the way to one take profit, they like to do the partials and have confidence in that. I've given you guys basically a guide on how you guys can take partials effectively. For example, TP1, let's just give me an example. Actually, let's go straight to the charts so you guys can actually see a perfect example of this. So let's just say, for example, we have 5-minute order block right here. Okay, let's just say, for example, we take this trade right here, just because a strong big move breaking structure right here, as you can see. So when we come back to this price point, you're expecting a price move up. Let's say we enter off of this candle break right here, stop loss right below the lows right here. We could put it right here. And let's say previously, the original strategy would be stop loss. You have 3 TPs. From a previous strategy, you had 3 TPs. Okay, you would have, for example, TP1, TP2, and the TP3 is up here. Okay, once TP1 is hit, my original strategy rule is stop loss is moved to break even. Okay, all right, break even. So risk-free trade. TP2 is hit, then that's when you start trailing your stop loss. Okay, you basically trail your stop loss all the way until TP3, your final TP is hit, and that's when you fully exit out the trade, because your third TP may never ever get hit. So instead of letting the trade go all the way back up here and then all the way back down to hitting you out break even for the rest of the position, you rather trail your stop loss at that point to maximize the most out you can, right? So that is the 3 TP system that, again, I taught on my YouTube channel previously. You guys can check out the video if you guys want to see me explain that more in depth. But my new system that I've currently been using in backtesting and it's giving me better results is straight up using one take profit. Okay, and the reason for this is because let's say we want to trade, right? When we're trading, we need a profitable trading system. And what does a profitable trading system consist of? Well, it consists of 2 major things. Okay, these are 2 major things that a profitable day trading system consists of. Okay, and I'm gonna list them right here real quick. Let me see if I fix this microphone real quick. Hold on, guys. Okay, it consists of legit win rate, as well as basically risk reward, or R. So average size of winner, average winner versus average loser for beginners out there. You could think about it that way. This is the only 2 things that matter in a profitable day trading system. Yeah, there's other things like, for example, drawdown, how much drawdown you're in, but we care more so on a big scale of a big sample size. What's our average win rate? And what's our average outcome for each trade? What's the average winner size? What's the average loser side? Okay, we want to keep this data as consistent as possible throughout the whole system. Otherwise, it's gonna mess up your statistical probable edge. If you think about it this way, right? If you have a 1-to-1 risk reward, all you need is greater than 50% win rate to be profitable. Okay, What if we change that though to a 1 to 2 risk reward, where we have a, let's say, I don't know, 1 to 2, so you only need higher than 33% win rate to be profitable. 33% is break even. Okay, this is very, very doable. 3 out of 10 trades, if you win 4 out of 10 trades, you will be profitable with a 1 to 2, and so on and so forth. The bigger the win rate, or the bigger the risk reward, obviously typically the lower the win rate, vice versa, right? We want to be maximizing this, and the only way to do this is through tons of backtesting and result data collection. That's why it's extremely important. Also test out on different strategies and see which one finds best for you. I would only personally stick with one strategy, personally, because I think consistency goes a long way, and you have too many strategies, you're looking at too many things on a chart, and it's just not good for you. We're not here to catch every single one of these big moves ups and down, okay, throughout the whole day. That's what I used to do when I was trading previously before. Let me just change this color so you to see. I would always try to see, okay, let me find a strategy where I can maximize every single trading possibility, where I can catch all 3 of these bounces. There is a trading strategy for that I do personally have, that I can catch every single basically big move, but it has a lower win rate than a very select system where there's a very specific setup that has to occur with many confluences. Okay, so again, those are things you definitely want to take into consideration where you're thinking about, oh, should I catch a whole move, should I trade only once a day? It all depends on how often your setup occurs. So I don't limit myself to a number of trades, but rather I know roughly how many trades my setup gives me every single day, and I just go based on that as a statistical mechanical strategy. Okay, so if my setup is hit, I'm taking the strategy no matter what. Otherwise, I'm not. Okay, I'm just looking at the chart risk free, right? So now, keeping this in mind, what I see a lot of traders online do is when they take these partials, right? I'm not going to name out any people online, but I see this happen so often. People are taking partials, basically, let's say at a 1 to 0.5 risk reward. You're risking 1% and you're taking profit at 0.5. Doesn't make sense to me, right? You need an extremely high win rate to be profitable in this system. And when you're trading a system like this, right? Again, each strategy does depend and vary, but it puts a lot of pressure on you to win more trades. You have to win more trades in order to be profitable. Otherwise, you're screwed. What a lot of people see, I see is, for example, they do a 1 to 0.5 risk reward, right? They take 50% off on the 0.5, and then they do 50% rest off at 1 to 1 or 1 to 2. If you do the math here, let's just say 1 to 1, 1 to 2, 1 to even 1 to 3. If you do the math, like statistically, your average risk reward is probably going to be a 1 to 1, depending on when you take out the other 50%. And you're targeting very far, right? 1 to 3, 1 to 4, etc. But the thing is, 50% of your size has already been taken out the market at half your risk. This is a very big disadvantage. I highly don't recommend anyone taking profits below 1 to 1. This does not make any sense to me. And even then, there's another thing I see traders do online, right? These gurus or whatever you want to call them, fake traders selling signals only. That's the only way to make their money. I do also do signals as well once in a while, but that's not my main income, of course, nowhere close, right? Trading is my main source of income currently, so there's that. Anyway, I see a lot of these traders, they do a 1 to 1 risk reward, right? They say, okay, take 25% off at 1 to 1. And then they have a 1 to 2 target, take another 22% off, another target, 1 to 3 off. And then finally, they have a 1 to 4, for example, off, right? Look at what happens here. On their chart, it looks like they hit a 1 to 4 trade. Oh my gosh, yo guys, we just hit a 1 to 4. But in reality, if you do the math calculating this, I believe you average out to a 1 to 2 risk to reward. If you're doing this, okay? You're doing something like this, you're actually averaging to 1 to 2 risk to reward. So average 1 to 2 risk reward. So now my question for you guys is, I don't understand when traders do this. It doesn't make any sense, right? What are the odds it hits 1 to all these targets? What are the odds it hits 1 to 2, 1 to 3, 1 to 4? Very a lot lower chance, right? Than if you took off everything at 1 to 2. Why wait and spend all your time managing this trade, setting break even, try to trail stop loss, all this, when you're getting the same outcome with someone that has a static risk reward, for example, in this situation, as a 1 to 2. They're taking full out at 1 to 2, right? There's literally no outcome difference. It's the same thing, except the person that's targeting specifically 1 to 2 is gonna have a higher win rate. Why? Because they're fully out at a smaller target. versus when you're targeting a 1 to 3, 1 to 4, you have to make sure that these hits for you to achieve this 1 to 2 risk reward average. So to me, just from a statistical standpoint and probability standpoint, combining win rate and realistic results doesn't make any sense to be doing a system like this, especially when you 4 take profits. That's doing too much. For me personally, if you really wanted to be taking partials, maximum 3 take profits. That's the max. First stop loss break even, second trail until third. That's it. Okay, you want to keep it as simple as possible. You don't want to complicate trading too much. I've seen too many traders don't like complicated, and it is not necessary at all. Okay, and especially when you complicate it and taking too many partials, what I found is it's very hard to collect your data. And the reason why is because when you're taking partials at every single different, risk reward, it averages out to a very different number every single trade. We want to be keeping our risk reward roughly around, the same number each trade. This way, we can basically have a statistical edge that we know is proven 100%. Okay, if we have these risk rewards all over the place, one trade I have 1 to 0.5, one trade I have 1 to 2, another trade I have 1 to 10, and then I have 1 to 0.5. Your trading system is not really mechanical in a sense, and it's very inconsistent. We don't want inconsistency in trading. We need consistency and discipline. Okay, so that's one thing why I truly believe I'm sticking to 1 take profit now. And not only this, but I'm trying to learn how to continue improve my intuition in the market, so I can set that 1 take profit at the best point where I can maximize the most out of my trade, right? So when I'm taking 100% off at that take profit, that is my real 1 risk reward. So if I have a risk reward, let's say a take profit of 1 to 4, I truly made 4 times my risk. Versus if I was doing partials across the way, no, you're not. Okay, it's way different. And also, not only are you, when you're targeting like super far with these partials, let's say 1 to 3 risk reward, 1 to 4, you're having all these targets. Not only is this issue when it comes to probability of hitting all these targets as well as taking your position off, but also many times a lot of people start trailing stop loss in between these targets, or they set to break even, and that basically essentially ruins it even more, right? Especially when you have 25%. Let's say you take a profit at 25% here, 25% here, and then you set your stop loss to break even here, okay? At this point, okay? You have 50% of your position not even at a 1 to 2 risk reward, and the other half is out at break even. Let's do the math, guys, here. This is a really bad risk reward, okay? Your risk reward is probably going to be a 1 to 1 or even lower when you're doing this, having to have halfway percent go rest to break even just so you can get a further target. But what's the difference when you could just get a 1 to 2 simple, quicker way and more results in higher probability? It makes no sense to me. I think this is a thing that a lot of people, gurus especially, use to market to other traders, especially when you're new coming into the trading industry. They're trying to use this as a marketing tactic to make it seem like, oh, I'm risking $1,000 for 4,000 gain. That's not how it works when you're doing a trading system like this, unless you have 1 take profit. So I highly recommend you guys check out this trading system. Let me know what you guys think about the trading system and about this 1 take profit. And honestly, again, I find a lot of people do with why they take partials is because of fear and greed. They're letting fear and greed control them, okay? They're fearful that price is going to reverse on them, so they take partials on the way. They're also very greedy because they have their partial positions, for example, all the way up here, I have partials all the way up here as final target. They want to maximize the most out of the trade. In reality, what they're facing and realizing is they're actually doing the complete opposite. It's contradicting what they're actually truly trying to do. So, for example, I literally explained to you guys the methodology behind this and statistical reasoning as to why I prefer 1 take profit now. However, here's one thing I will mention. I have 1 take profit now in this system. When you have a 1 TP system, I would highly recommend you guys have a point where you would set your stops to break even. This reduces your losers, increases the win rate, and essentially when you have 1 take profit, let's say take profit is trying to maximize the most out of trade, sometimes it doesn't go in your favor and go all the way, okay? Sometimes it gets very close but never hits, right? In that situation, at least you're protecting your capital and you have a break-even point, okay? So for me personally, let's just say you have 1 TP. What I do is at 50% of my TP, I set stop loss break even. That is a very good rule that I highly would recommend. This takes out the guessing work of, oh, it broke out this structure, it broke this structure, this and that. In reality, this situation, let's say you're let's just do a trade real quick. For example, here, let's just say, okay, we'll take a trade right here. Let's say we take a trade right here. Okay, pretty common trade. You can do whatever you want. You want to call this whatever you want. Supply zone, order block, whatever. Let's say you were targeting, let's say you were targeting this high. Let's say you entered a bit early. This is a 5 minute. I usually enter on 1 minute. Let's say you're targeting this high right here as a target right here. Okay. Now, if my risk reward is a 1 to 4.76, let's round that to a 1 to 5. Let's take out, you can even take out tools if you really wanted to be very specific. Okay, let's just say 50% of this leg right here. You are setting your stop loss to break even when price has tapped the 50% mark. Okay, so at the 0.5 level, you're setting your stop loss to break even. This is a risk-free trade just in case for some reason it doesn't hit your TP. You won't be losing. It won't be a losing trade. You're you know, protecting your capital while also trying the best way to maximize your reward without taking partials along the way, things like that. So look at this. Let's say there's 2 traders. Okay, there's one trader that's not very confident also. Another thing I realized is people that take partials, they're not really confident in where the draw on liquidity is and where the trade's really gonna go. And this comes a lot from not back testing enough or forward testing, even live testing out their strategy in different market conditions. Okay, so more experienced traders will know for certain that price will 99% hit that area or where they can maximize the most out of the trade. For example, let's just say a trader had partials. This is not a good example here because there's not much structure here going on, but let's just say, for example, trader was taking partials on this way, partial here, partial here, partial here. This is a partial at 1 and 2, which isn't bad at all, honestly. But point is, you're not actually getting a 1 to 4.69 risk reward. You're getting probably a 1 to 3. Okay, which is actually way different than a 1 to almost 5. So, you know, as you can see, this trader obviously made a lot more. Okay, having 1 TP and while protecting their capital in case something occurs where price reverses on them. No problem there. So again, that's basically the gist of this. For me personally, when I'm finding this 1 TP, this all depends on your trading system, trading setup. I can't really guide you on that. I do have a course though, if you guys are interested in learning where exactly I set my TPs, that's works for my strategy. You guys can definitely check out my course. It is down below in the link in the description. Again, if you guys are more interested in videos like this, let me know down below. I feel like I'm going to start making more videos like this that are more theoretical based, more like psychology based, rather than giving you guys like technical overviews, things like that. But again, let me know what you guys are looking for, and I'll see you guys in the next video. Peace out.